Hey everyone, it's Doug the Retirement Guy. Welcome back to our channel. We have a review of the Roundhill AMD Weekly Pay ETF. The real question that we ask is it time to invest or not? So we're going to give you a complete rundown of this fund, the good, the bad, the ugly, everything you need to know to make a great decision. Before we get there though, I got to do a shout out to all of our subscribers. If you're not part of the community, if you are not getting the information, don't be afraid to hit that subscribe button, hit that bell notification, and don't miss a single episode. We also got to say thank you to all the Patreon supporters out there. If you're not a supporter of the channel, boy, it's free. You can join it at Patreon. Look down in the description below. And then if you can support the channel, there's always extra things out there for you. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. So if you need any financial help, always contact a financial advisor. So let's take a review of the fund, the key vitals. Let's really what I always call, let's check underneath the hood. So this is ticker AMDW, which is from the Roundhill group as their weekly pays. It came out in July 24th of 2025. So realistically, we're sitting here, probably I should just say 3 months because we're hardly into October right now. Has an expense ratio of 0.99, which is very common. The assets under management is at $24.37 million. So far it's okay for a newbie. Nothing really earth-shattering that we want to look at. It is classified as a non-diversified, under the Investment Company Act of 1940, which basically indicates it can hold a small number of portfolio securities than many other funds. And that's not uncommon because they're really dialed into one fund only, and that's AMD. Now, the investment objections of this is to have a weekly distribution, so pay distributions to shareholders, providing a consistent income stream. They're also trying to do a leverage exposure to provide a calendar week return before fees and expenses equal to 1.2 or 120% the calendar week total of Advanced Micro Devices or AMD's common shares. And then weekly reset mechanism, which is rebalancing exposure weekly to approximately 1.2 times that at close of the last business day of each calendar week. So very simple, easy process. It does a great job of everything you asked for: rebalancing, trying to get you regular income, and then of course using a leverage approach. Now the investment strategy, the deep dive, getting underneath that hood, finding out what really makes this thing work, and that is the objective one is that weekly distribution. Of course, they want to pay consistent weekly. They want a regular income stream. And so far, since the beginning here of October, they have a distribution rate of 70.78%. Pretty darn good. It got my eye when we started looking at this. The number two, the objective, that 1.2 times leverage exposure, and that is to provide that calendar week equal to 1.2 times of AMD's regular stock. Now that is before fees and expenses, and it concentrates on that AMD performance. So when we take a look at the strategy implementation, what are they doing with it? Well, they're not really out there, as everyone always wants to say, oh, they're doing covered calls. These guys aren't. This is a total return swap agreements. Okay, this is one that they are not going out there and selling covered calls or covered puts. What they're doing is they're swapping agreements with other people. And we've covered this before, but I'll give you a quick version of it. And basically what it says is you're projecting that AMD stock is going to go up $10, or an easier number, let's say it goes up 10%. So you go ahead and do a swap agreement with somebody who thinks it's not going to do that. So there's a percentage that you're going to charge them for doing it, and you're basically going to clear itself out at the end of the contract of who wins. Someone's going to get paid, someone's going to lose money, someone's going to gain money, and that's what they're doing. It's kind of a new, I'll say new, call option type strategy, but I don't want to use call option because it's really swapping agreements. And this is all based off of the AMD common stock directly holding in AMD shares. And then collateral instruments is they do the short-term U.S. Treasury and ETFs and money markets, which is where they're really just holding their money. The weekly reset mechanism, which I was really, when I first started looking at this, I didn't quite always understand it, but it makes a lot of sense. At the end of the calendar week, they rebalance their exposure. So basically, they're starting over every week to targeting that 1.2% or 1.2 times return. So the agreements that they have, the swap agreements, they're trying to do out just 1 week out, make those adjustments to continue growing their assets. What has happened? The dividend income analysis, the analysis dividend, they've 70.78%, which is phenomenal. The 30-day SEC yield is 2.59%, and they do the weekly rollout. Now, they do the capital return. So estimated is approximately 100% of the distributions have been put out as return of capital. Now, is that a good thing or a bad thing? Well, if you've watched this channel enough, you will understand that the return of capital is actually a good thing for your tax purposes. So what it really is doing is how much money you're investing. Okay, and every time you get a distribution, your investment is slowly on paper dropping. So that what happens is the tax implementations are the ROC distributions reduce your cost basis, but are not immediately taxable. So higher capital gains or lower capital losses when the shares are sold. So the whole thing works when you sell your shares is when you're going to basically come back and pay out your taxes of what you've done. We have a complete video on this one, so I'm not going to spend a lot of time onto it. That you guys can definitely watch that and see how it all plays into effect. But the nature of a high yield, the high yield analyzation distribution rate is exceptionally high. Okay, so you want to watch a significant portion of the classified as a return of ROC, which we just talked about, and the distribution rates are favorable for market conditions and may not be suitable. This is the warning that we say. We have to watch the market on a regular basis to find out, is this going to hold or not hold? So when we do a distribution comparison to the industry, we really broke this thing down and said, let's see where we're all sitting with this. And basically what we were able to find was we got the AMD Weekly versus the VanEck Semiconductor ETF and then the iShares Semi ETF. So when we started looking at this and saying, okay, how are we going to compare these two? What's going to happen? Well, it was hard to do because look at what you got out there. You're dealing with a weekly versus quarterlies. You're dealing with distributions that are, as ROC, which I think is an advantage, but, everyone will say return of capital. While the other two are primarily dividend income, which means you're paying higher taxes when you receive it. Now, the expense ratio is definitely higher at 0.99 to basically 0.35. So the major differences between this ETF and other ETFs is AMDW offers weekly distributions versus quarterly. They use a yield is based primarily on capital return rather than dividend income, and AMD is a higher expensive rate of 0.99 versus the 0.35. So overall, it's like apples. I hate to say this, but it's apples and oranges. Okay, we can get into VanEck and deal with that, but I want that weekly income. I understand ROC, so I'm not scared of ROC. It's actually great for your taxes and then your investments. It does a great job across the board. So it's almost like AMD is just awful on its island, kind of by itself. So when we take a look at the portfolio, and you will see that 96% of the portfolio is done in swaps. Okay, so that they have these, for a lack of a better word, I call it an option. They have these swap agreements that they have out there. They own about 19% of their portfolio is actually in AMD stock. and then 10% of it is in the First America Government Obligation Fund. So when we look at it, the combined exposure of AMD through the swap agreements and direct stock, that gives them about 115% exposure to the leverage portion that they're trying to get the 1.2 for. So they're doing as much as they possibly can to generate your 1.2. Now, the concentration on leverage and mechanics. So our whole thing here is a combination exposure of the 96% swap, 19% stock gives you 115.62% total exposure to AMD. So the weekly reset mechanism is that they're going to rebalance this thing out so that they don't have too much stock or too many swaps, or balancing it so that we don't have too much cash on the sidelines. It's basically a non-diversified risk. Okay, when we say non-diversified, it allows concentration in fewer securities. That's why this is so strong with one stock as AMD. It's a single stock concentration. We have talked about that. It's a weekly reset benefit, and it's a derivative risk. Swapping agreements is introduced into this form of operation. The performance and since inception. So this thing really, like we said, we have to go through the time period, and this is where things start to, in a little bit to me, start to fall off a little bit. The key performance metrics from July 24th to September 30th, the fund return value was 1.52%. So this thing's not really designed to grow. It's really been built for income. So when you take a look at the AMD stock year to date, that thing's up 68.65%. The category as a whole is up 7.6%. So realistically, AMDW gets a D. So it's underperforming when it comes to the growth of the fund. Okay, so despite the strong year-to-date performance of 68.65% of AMD, you're not seeing it in AMDW. You're not getting what they're asking for. So for performance-wise of growth, the fund is just not doing what we're expecting it to do. And that's shocking to me, because normally when we see the swaps, they're keeping up the pace and they're keeping up to date with what's going on. Now, let's take a look at the underlying assets of the fund. Well, we take a look at what they're investing into, year-to-date returns. The AMD stock is over 68.65%. Okay. The VanEck SMH is at 39. This Spider is at 34.95. Invesco is at 27.96. And the S&P itself, the IT section, is 22.3. So, AMD is showing exceptional growth that we're not participating on with this fund. The semiconductor sector as a whole is staying at 39.04%, and we're not seeing that part of it as well. So the other comparisons that we see is, everything is in the semiconductors or the IT. So just another proof that we're not getting the return from the fund as much as we were. So what do we actually get? Now let's take a look at the distribution side of this. Since we're not seeing the strong growth, my question has got to be okay, what is the excitement to AMD? What's going on here? And when we pop the hood on the dividends, this is really where this thing comes alive. We're taking a look at distribution rates at 70.78%, which is very, very solid and very strong. When we look at the chart for the dividends, we see this thing started off in August, and then it come back down, and now it's going right back up to where it's finding, I call it its sweet spot. The dividend average is 68 cents per week per share. And when we take a look at the last two payments, both of them are above the average price. One's 10 cents above, one's 2 cents above. It's that center core when they were starting to have their problem, is that mid-September area. And even if you look back, AMD was having that same kind of issue. But so right now I'm seeing some positives coming out of it, and I see some things at the very bottom at the August when it first kicked off, when this thing was paying $1.30, $1.13. That there is some huge potential under the hood of this AMD fund. This is why we said, I think we put this on one of our videos past, is that this is one that's on our watch list. This is one that we're looking out for. That this is more of a generating cash income fund, but we have to watch our either NAV erosion, if you want to call it that, or the losses on the value of the fund. It's not growing the way we wanted it to, that we see like with HOOW, there's having great growth using the same strategy, but AMW is not. So this is one area. This is for income. So investor assessments, what we're basically coming to you. This is suitable for sophisticated active traders, investors with strong market knowledge who are actively managed or monitoring their positions. Short term, this is bullish. We feel that most of the strong benefits of AMD near the term performance is potential. So the more AMD does better, we think this is going to do better. But the risk awareness that we have to put out there, it's completely understanding the leverage, the volatility drag, and the return of capital. You have to understand what that all means. Who is this not suitable for? Long-term investors. This is not something you're going to buy and sit on, basically what I would call the sit and forget it policy. You're going to have to keep an eye on this one because the volatility that we're seeing in this fund is extremely, you're seeing a lot of highs and a lot of lows. And I'm not talking about volatility that's good for a fund. What I'm saying is the fund itself is having a lot of highs and a lot of lows. You don't have a lot of return to help you with. You don't have, 70% sounds great in the distributions, but you don't have as much as you need to cover for losses. Now, this is when always the computer will spit back and say, diversification seekers, this is a one stock fund. This is a one horse pony. So it's one of those things they would love to see you in a portfolio, especially in retirement, that you have a multi-diversification. And then I always say the retail investor, the lack of knowledge, time, or resources to actively monitor what's going on with AMD. So this is one of the Roundhill Weekly funds. I don't want to scare people away, but at the same time, I don't want to tell you, and I want to be honest with you, that this one here needs more time to develop. Don't get excited. Don't go crazy. This one needs more time. And what is the time we're looking for? I'm looking for probably another 2 to 3 months on this one to basically come back and tell me, is this fund, what direction it's going to take. I really want to see this thing follow more because we're using swaps versus call options. I want to see this follow more of the AMD pricing. I want to see this thing develop and give us more not just income, but more of a growth factor as well.
Thank you for watching. Press the like button, hit the subscribe button, and join.